Welcome everyone to the initial voyage of Schneider Downs Wealth Management's private equity podcast video series called Traditional to Seed and Everything in Between. Talk about the comings and goings in private equity and specifically, the status of markets, deals being done, status of fundraising, and the overall exit environment. Matt, good to have you. Really excited about this first.
Happy to be here. Yeah.
Kind of a long time in the making. Lots of outlines being done, but we're going to get started. So this is kind of what's the difference between, a limited partner investment in a private equity strategy and a co-investment. What are private equity secondaries and how has that evolved? What's a GP-led secondary? These are all things that we're going to talk about in greater detail once a quarter as we talk about what's moving in private markets. And so when we think about the current status of private equity markets, Matt, there are a lot of, I think if you're doing the Venn diagram with public markets, when you look at kind of the overlap, I think where you see a lot of things kind of affecting the markets are kind of interest rates. And the interest rate market prior to the start of 2022 was incredibly favorable, right, to private markets.
Yeah, and really, if we go back and if I was going to plug some of your other videos and some of your other commentary that we put out there, Jason, it's not all too different than what we're seeing in small cap right now, right, where interest rates are affecting what you can borrow at. And for small cap companies that are on variable lines, or for private companies on variable lines, that is a very real impact to what their bottom line is.
Yeah, and I think that you kind of hit the nail on the head there, and you look at kind of companies like Microsoft and Apple who totally revamped their debt structure and they put low-cost fixed-rate debt on during COVID, and that's one of the reasons you've seen their outstanding return, right? They have this low fixed cost. They're not necessarily going to be the big beneficiaries if interest rates decline. But what we have seen, a complete and total lack of deals being done. Not, I guess, that's probably too strong, but I think you've certainly seen deal volume decline. Initial public offerings. Is the window open? Yeah, the CEO of Jefferies says that it's open, and I think that if you are a very successful company that's got good financials, can you IPO your stock? Yes. Is it not going to be a success and trade above the IPO price? Possibly, but it's certainly not the receptive market that we had in 2020 and 2021 in the very beginning part of 2022. And the whole periods for a lot of their investments are longer. And that's causing limited partners like our clients, right? Like allocators like Schneider Downs, endowments and foundations to really look at the pacing of their investments, who they're putting capital with. It's certainly been interesting to watch because in the matter of like 3 or 4 years, we've seen kind of the highest of highs, the lowest of lows, and now we're kind of working our way through it.
And from an LP perspective, so if you're a limited partner investing in one of these deals, and the pace of capital that's being called right now has certainly felt like it's slowed. And I think you could look at that a few ways, but the way we would look at that is, well, that's positive because that means we're not reaching. The managers we deploy and that our clients are in are not buying companies that they feel aren't good deals. So it's, we kind of had this 2020, 2021, 2022 peak, and then market reset a little bit because, capital isn't as cheap, right? So now that we're borrowing and there's an actual cost, a real cost to borrowing money to go invest in these companies, we've seen, a little bit more due diligence and a little bit more patience.
Yeah.
Making sure we see, the right deals and the right valuations. I think some of the valuations we saw people paying and the numbers and the multiples we saw in 21 and 22 were just, we had to kind of take a second look at, right? If you had been paying attention in the news, July this year, so within the last couple months, Google was in talks to acquire a cybersecurity company called Wiz. So, I remember the day that hit CNBC, kind of the tape, $23 billion acquisition of Wiz. And another example of company that's valued at $23 billion now, at least that's what Google was willing to pay, and started as a venture capital company. Now, I think what's interesting is, we had the CrowdStrike going on at the same time, and there's multiple things that I think, not why Wiz backed it, this deal did not get done. And one of the things is belief in the company. So their goal now is, hey, we've seen some successful IPOs, which Jason will hit on. Let's focus on continuing to grow our revenue at this rate that we have been. We're working with some of the biggest companies in the U.S. right now and globally. So let's continue to grow our client base, and let's have our own successful exit through an IPO.
And I think it does show from Wiz's standpoint, and that they're backed by Lightspeed, Sequoia, Green Oaks, Andreessen Horowitz, I think Index Ventures, kind of a who's who of venture capital and growth equity firms, and certainly the most prominent of the companies to kind of potentially have these big exits. And this would have been one of the bigger exits to a strategic that I can think of. On behalf of Matt and myself and our teammates on the investment team, at Schneider Downs, we look forward to bringing you more of traditional Defeat and everything in between. And until then, Matt, thanks for joining, and look forward to talking to you guys about it more.
Yep, looking forward to it.
Take care, guys. Have a good one.